Ireland's economy recorded another strong year in 2018. That was despite a slowdown in China, the euro area and in Britain. Ireland in fact jumped its final hurdle in its post-crisis recovery when recording a government budget surplus for the first time since 2007. Ireland has now joined half of all EU countries in the black. In fact, it's some turnaround in the space of 7 years from Ireland recording double-digit deficits as a percentage of national income. In Exchequer terms, or central government terms, Ireland actually recorded a cash budget surplus as well last year. That is important for the NTMA. It means that the cash balance that we built up through last year is enough to cover both the maturing bonds in June and in October of 2019. And looking ahead, the plan to borrow 14 to 18 billion this year will primarily be used to refinance maturing debt in the final year of post-crisis maturities in 2020. We talked in each video last year about monitoring the US economy for signs of recession. This is important to Ireland because of Ireland's increased reliance on America and particularly US multinational companies for corporation tax. But if we look at the key signal, whether the US bond yield curve has inverted, that red flag hasn't happened yet. Yes, the gap between short-term interest rates and long-term interest rates is smaller, but the whole US yield curve has come down since last time. That may actually buy a little bit more time for this cycle. The recent slowdown in the euro area is very similar to 2015 when it was China-led. We know the Chinese economy has slowed, probably for two main reasons. One, the US-Chinese trade war, and also because of the Chinese authorities' crackdown on leverage or high debt in their economy. Yet a Chinese recession, or even just a slowdown, is less threatening to Ireland than one in the US, in the euro area or in Britain. There is an indirect impact via Germany, but also via some of the US multinationals with operations in Ireland, such as Apple, where we've already seen a slowdown in revenue for that company. But there are positives too. Oil prices have come down, and we've also seen Irish bond yields react by falling over the last few months. Next time around, we should hopefully know a bit more about the Brexit process, but for now, Happy New Year.